Limited Liability Companies, LLCs. Now, LLCs come in several flavors. You can have single member LLCs, you can have LLCs taxed as a partnership, and you can have LLCs taxed as a corporation. Now, LLCs taxed as a corporation, I'm going to save that for part 4 of this video, and I'm only going to focus in on single member LLCs and LLCs taxed as partnerships. Now, single member LLCs, these are going to be your independent contractors, your sole proprietors. They're going to be the sole owner of the LLC. And this sole owner is looking for liability protection to separate the business assets of the LLC, the business that they're running, and their personal assets. They're looking for that liability protection. LLCs taxed as a partnership will have multiple owners that own that business. There's multiple people involved with the business that have a ownership stake. And LLCs are considered pass-through entities, meaning the LLC taxed as a partnership will not pay taxes. The individuals who own it will pay the taxes on that entity. But LLCs taxed as partnerships offer that liability protection that people want to separate personal assets and liabilities from business assets and liabilities. The Articles of Organization is the governing document over a limited liability company. This is the document that you're going to file with your state when you set up the LLC. This is where an attorney can be super helpful when filling out this document, because you got to define what the purpose of the LLC is, along with filling in all the additional information when you're setting up the Articles of Organization. The tax structure of a LLC. A single member LLC is very easy. You don't need to file a separate tax return. Single member LLCs, when you have a sole owner of a limited liability company, the activity, the revenue, and expenses will simply go on the 1040 of the owner, and it will go on Schedule C. You will file Schedule C like any independent contractor, sole proprietor, for a single member LLC. Revenues, expenses, go on Schedule C, ultimately getting down to taxable net income. LLCs taxed as a partnership will file a separate tax return. It will file tax form 1065. A 1065 tax filing is generally due March 15th, and it will provide the members' owners a K1. The members will report the LLC K1 on their 1040. A little different than a Schedule C for a single member LLC. You're effectively reporting the net income, the different aspects of a K1 on your 1040 from the 1065 that was filed. Let's go through a quick example of an LLC taxed as a partnership and how the income will get broken down. This LLC has $1 million of net income. The LLC member, Helen, owns 35% of this LLC. Helen will receive a K1 for $1 million times her 35% ownership, effectively providing her a K1 with $350,000 of taxable income. Now, it's not always as clean as that. There's a lot of categories if you've ever looked at a K1, but for simplistic measures, if it's just business income, Helen has $350,000 of K1 income from her LLC. All right, let's go through some pros and cons of limited liability companies. Pro number 1, the setup. Setting up an LLC is easy. You go to your state's website, fill out the Articles of Organization, pay the fee, and in a couple weeks, you have yourself an LLC. Pro number 2, the cost. The cost of setting up an LLC is comparatively inexpensive. The maintenance costs, especially with a single member LLC, will be relatively inexpensive compared to our other 3 options in this video. A multi-member LLC will definitely cost more than a single member LLC, since it does require greater bookkeeping and a separate tax filing. You have to file tax form 1065 to generate the K1s for all the owners. It will be less expensive than most partnership filings, S corporation filings, and C corporation tax filings. Pro number 3, flexibility. Multi-member LLCs give you flexibility on the amount of members you want to add and flexibility on how to pay distributions. In other words, LLCs can have unlimited members and don't have to pay distributions pro rata to ownership. This advantage will make a lot more sense when we look at S corporations. Con number 1, payroll taxes. Single member LLCs and LLCs are considered self-employed and will be subject to payroll taxes. This can surprise a lot of new business owners that you're subjected to Social Security and Medicare taxes. You have self-employed income from owning a limited liability company. Con number 2, transferring ownership. Transferring ownership and membership units can be challenging with an LLC. There are certain states that will make you start a brand new LLC if a owner sells a partial piece of the LLC. It also can be challenging trying to value what that limited liability unit is worth. LLCs are not easy to transfer and sell units from. Con number 3, raising money. It is really challenging to try and raise money in a LLC for various reasons. Between payroll taxes, challenges of buying and selling the units, receiving a tax form K-1, owning shares of an LLC as an investment can be unattractive to investors. Yeah.